Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Hochschild Mining PLC. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Charles Gordon, Head of Investor Relations of Hochschild Mining PLC, which trades out of the OTCQX best market under the symbol HCHDF, now the LSE under the symbol HOC. Welcome, Charles.
Thanks very much, Matt. Welcome. Good morning, everyone. Let me start my presentation just by saying that I think this front page gives you a really good idea of Hochschild Mining and what we do. We are a precious metal miner based in Peru. And that there is a sort of snapshot in the mountains in the Andes of our largest asset, Immaculada, which is a gold silver asset that we've been operating for about 8 years. Usual disclaimer, and then let's give you an introduction to the company. I mentioned Immaculada, that's really the cornerstone of the business. We have 3 mines at the moment in operation, 2 in Peru, Immaculada and Palancata, although Palancata has just gone on care and maintenance. And Immaculada, as I mentioned, as well as that, we own both those 100%. And then as well as that, in Argentina, as you can see down in the south, in the desert, we own 51% of San Jose mine. Again, all of these are underground narrow vein deposits, gold, silver, and some of them silver gold. San Jose in Argentina, for example, is 50-50 gold, silver. Immaculada is mostly gold, and Palancata was mostly silver. Now, we've just presented over the last couple of weeks a new capital markets event, and I hope that this presentation will give you a little bit of the highlight of our relaunch strategy. Immaculada, the mine itself, remains the cornerstone of the business. We've just achieved a permit in Peru, a new EIA, the Environmental Impact Assessment, for 20 years. And going forward, this mine should be a 200,000 ounce per annum mine production base for the company. Costs at the mine are expected to fall substantially towards the back end of 2024. And of course, there's a lot of exploration upside that will extend the life of mine and maybe increase the grade. We also have near-term growth, which is somewhat of a rarity in the mining industry amongst producers. Mara Rosa is our first asset in Brazil, and we're currently right towards the end of construction there. And we're expecting the first gold pour next quarter, so in the first quarter of 2024. So it's a very exciting moment for the company. We also made a new discovery in 2022 called Roy Rapata. That's right next door to the Palancata mine that I mentioned was just gone on care and maintenance. We're going to go through the permitting process for that, and then in 3 or 4 years should have a new low-cost 100,000 ounces of gold per annum mine ready to go. We've also emphasized the capital discipline of the company, focused on paying down debt, finding more growth options, and also capital return. You can see at the bottom of the page where our production is roughly this year. We're around that 300,000 gold equivalent ounces mark at costs around $1,500 an ounce. And the metal split, you can also see, is very roughly 60-40 in favor of gold. Excuse me. The company has actually changed a lot in the last few years. We've bought and sold a number of assets to change the portfolio. Aclara was a rare earths business we had up until about 2 years ago. We demerged that business onto the Toronto Stock Exchange in November 2021. We terminated an option on a project in Canada called SNIP. And we're looking for strategic alternatives for our very, very large gold deposit in Chile for Volcan. And the same thing for smaller projects in Peru called Crespo, Azuca, and Arcata. So we're left, over the last 2 years, following these processes, we're left with 4 key assets, the ones I've mentioned: Immaculada, Mara Rosa, Roy Rapata, and San Jose, very much focused on Latin America. And we've emphasized over the last few weeks that our strategy now is about continued delivery of growth options for the company based around brownfield. Around brownfield, we very much want to continue to extend the life of mine of all of our assets, and very much focused on mineable resources. We're always searching for operational efficiencies, looking to optimize our processes at all our mines. And we do have, as a company, a very, very good track record of developing assets, delivering projects on time and on budget, which is a real rarity within the industry. ESG is also a key part of our strategy, and I will take you through a number of slides later on that subject. And of course, as I've mentioned already, disciplined capital allocation approach. We do tend to prefer more of an organic growth focus, and we're looking also to pay a bit of debt down, maybe restart the dividend at some point over the next year or so. But of course, we will continue to look for M&A, as we did with the Mara Rosa asset, which we bought in 2021. A couple of weeks ago, we gave a 3-year forecast for the company. You can see at the top of this chart the attributable production and the split there. But effectively, we're going from around that 300,000 ounce per annum of gold equivalent ounces all the way up to, in 2025 and 2026, between 340 and 375,000 ounces. And that's before we actually add on and more ounces from that project I talked about in Peru, Royropata, and anything we also find on the exploration front. In costs, we're currently, as I said, at around that 1,500 mark, and we're looking to bring those down. And over the next few years, through the geology, but also cost efficiencies, we should be able to bring down the costs of the company, the all-in sustaining costs, to between 1,100 to 1,200 by 2026. So that should put us back to being a little bit more of a low-cost producer. I talked about our development expertise. We've long experienced in bringing projects in Latin America into production. We've constructed 5 mines since IPO. IPO was in 2006, and all of them have been on time and on budget. And we specialize at the moment in operating these mid-sized underground or open pit mines in Latin America. We have also a lot of expertise in extending that life of mine through low-cost brownfield exploration. San Jose, Morris, and Palancata were mines that were all actually started in 2006, 2007, so virtually at the same time. 2 of those were underground. San Jose, of course, still a mine. Palancata only just stopped. And Morris was a small open pit project or mine in Mexico. We then built Immaculada around 2014 and 2015, and that commissioned in 2015. And of course, we're very close to starting production at Mara Rosa in Brazil, and I'll tell you about that later on in the presentation. The brownfield exploration strategy for us has been a key part of the Hochschild mining story over the last few years. We have a very, very good track record in there. We've found since 2016 over 3.5 million ounces of gold equivalent resources, and that discovery costs comes at an average of $44 an ounce. So very, very cheap ounces to find. And we think there's still a huge amount of exploration upside in our current assets, in and around them. And you can see on the right-hand side in that chart, the sort of amounts we think are still there for us to explore and discover and convert into mineable ounces. We finance everything with cash from our operations, so all the mines have to pay for their own exploration. And as I said, we think that there is huge potential to deliver another maybe even 5 million ounces going forward. And as well as that, obviously, there's huge exploration potential in the further surrounding region outside of these plants. So I think it's worth emphasizing, especially in the case of these underground mines that we run, which is quite a niche area of mining. They do go on for many, many years, these mines. Arcata was an asset that we ran from 1964 to 2019. So these epithermal deposits, which are pretty close to the surface, but underground deposits, it's it's pretty much like investing in a region of veins, and you start with just one vein and you broaden out the whole land package. You find many more veins and you go on for years and years and years. And generally, they do have typically a short formal mine life, but you keep finding more. So that for us is a key part of running these assets. Now, Peru's been very much in the news over the last couple of years, and I think, understandably, certain investors have pointed out how that has made it more difficult to invest. But I think we've very much in Peru turned a corner. I think you obviously saw a couple of years ago a communist government was elected. You saw somewhat of an anti-mining sort of attitude, but I think that's changed hugely in the last year, since Pedro Castillo exited from office and Dina Boluarte became president. I think that the current government has made mining a real priority. And that's completely logical. It's the largest industry in Peru, and it's very important in terms of economic development. They've been actively promoting mining investment throughout the last year. The delegations they've sent to the key mining conferences, for example, PDAC or Paramin or IMARC, have included all the top-level government delegates, and Prime Minister, the Minister of Mines, Ministry of the Environment. They've also strengthened a number of government units to guide permitting through the system. They've approved a lot of key critical permits over the last year for key mining projects. Obviously ourselves at Inmaculada, but also Zafranal from Teck and Toromocho from Chinalco. And they're in the middle at the moment of launching a number of initiatives to streamline mine permitting. High-level commission has been set up by the Prime Minister to try and make sure that some of these permits go through the system a little quicker. It's probably worth pointing out, and I'll come on to this, but Hochschild took 4 to 5 years to go through the system with the Inmaculada permit. And that clearly is a very, very long time. So they understand that the government, and as part of their promotion of the sector, they are looking, as I said, to streamline that permitting process. Just moving on to Inmaculada. Inmaculada is, as I said, our key asset. It's in southern region of Ayacucho in Peru. It started in 2015. It's been a very reliable asset and has pretty much beaten guidance every year since we commissioned it in 2015. I talked about just now and throughout the presentation about this modified environmental impact permit that we achieved in August. Very, very crucial, obviously, for the mine to continue. And of course, there's a huge potential for us to find more ounces in the surrounding area. Immaculada's forecast going forward, as you can see, it's pretty much around that 200,000 ounce per annum mark, maybe a little more over the next couple of years. We mentioned here the fact that the costs, as you can see, in 2024 do go up a little bit. That's really down to the effects of this permit delay that we had. I mentioned it took a number of years for us to achieve that permit, and those delays meant that we deferred a lot of capex in 2023, and that will come through in 24. So about 45 million for next year is really a delayed capex, and includes expanding the tailings dam, the waste rock facilities, installing a reverse osmosis plant, and also doing mine development. Mine development's a key part of doing this underground narrow vein mines. You have to develop the mine every single year, and that was delayed. So that's why you see a sort of almost more of a one-off bump in costs. But then you can see in 2025 they moderate back down to more like $1,300 to $1,400 an ounce. I'm not going to spend too long on this, but you can see that this permit we achieved, this MAIR, as we keep calling it, the Modified Environmental Impact Assessment, was for a huge area, much, much larger than the older one. With these mines, you start with a small area, and as you find more veins, you have to modify your documents and your permits. And you can see on the left-hand side, the original environmental permit was a much smaller area than on the right-hand side, which gives us license now to do a lot more exploration into almost all of the surrounding regions. So it's been very important. There's lots of opportunities in our brownfield program. We've got programs already ongoing there. Again, we're a little bit delayed. Excuse me. Let me just go back to that one. They were a little delayed over the last 6 to 9 months, but we've started again there, and we're drilling in many areas surrounding where we're mining at the moment. And clearly, the idea in the short term is just to increase the life of mine and add a number of ounces, maybe 500,000 to 600,000 ounces over the next few years at good grades. The next mine we have, well, obviously Palancata, I mentioned, is just gone on care and maintenance. We'd run out of ore in the current permitting mining area. But as I said, in 2022, we found a whole new area called Royrapata. Big discovery for us. We found 50 million ounces, as you'll see. There will be expenses associated with keeping the Palancata mine on care and maintenance, as you can see. But it's exciting to think that this will be revived in the next 3 years. What does this new discovery do for us? Well, as I said, we found 50 million ounces of silver, or as it says here, 700,000 ounces of gold, depending on which way you look at it. And that was just after one drilling campaign. So very exciting for us. We should be starting production there in 2027, having received the permit around 2026. Production of 100,000 ounces, as I mentioned. CapEx to achieve this will, of course, have got a lot of infrastructure already there, including the plant and roads and electricity connections and things like that. So a lot of that's already there. The initial CapEx is mostly, again, as I've mentioned, to do with doing development and preparing the mine, digging the tunnels and the shafts. So about 55 to 65 million. But you can see the costs, the all-in sustaining costs potentially for this will be around $1,000, which is a pretty low cost for the industry. So very exciting for us. And this area will, I think, continue to grow. We're going to continue from next year to drill, do another campaign around Royrapata to try and expand that resource. The belief is there could be another 50 million ounces there. So this could be a 100 million plus system. And it's just to the northwest, actually, of where we originally found the Palancata vein and the Palancata mine. So it's in some ways a little unfortunate. It's right next door to where we've been mining, but the permitted area ended just there. So that's why we have to wait a couple of years, 2-3 years, to get the new permit. The actual achievement of that permit should be a lot less complex than Immaculata. I'm not going to go too much into this, but obviously there's a lot more support from the government now on permitting. And it's a much smaller area we're trying to permit anyway versus Immaculata. So hopefully that process will be a little smoother and shorter. Just moving to Brazil now, which has been a fantastic experience for us. Brazil, very stable, despite a change of government very recently. There's a lot of support for mining within the country. Mining tends to be permitted and regulated at the state level, and we're in the right state. We're in Goiás, and that's been a very pro-business, pro-mining jurisdiction. Mara Rosa permits have gone very well, all on time and on budget. The construction's gone really well. We've been able to hire a lot of local management teams who are extremely well qualified. So Brazil for us has been a really good experience so far. Mara Rosa is going to be about 100,000 ounces per annum mine, and you can see next year we'll produce actually almost up to that level, between 83 to 93 thousand ounces of gold. It's just a gold mine, and it's actually an open pit, and it's got a 10-year life of mine. So we're very excited by this. It's really nearly done. And it has a good effect on Hochschild. It increases our reserves by approximately 75%, increases production, while roughly from 300 to 400,000 ounces versus the 23 level. And of course, it's much lower cost than where the company is at the moment. So really beneficial effect for Hochschild Mara Rosa brings. And it's on track. It's almost done. It's 99% complete. I think there's just electrical wiring and various things like that left. But most of the mine is pretty much done now. Health and safety has been a very key part of that. We've had nearly 4 million hours there without any lost time accidents. All the ESG programs have been advancing over the last year or so. So it's looking good for a first gold pour in the next quarter. There's a schedule. That's not something I need to dwell on, but as I said, first gold pour next quarter, commercial production, and between 83 to 93,000 ounces to be produced next year. And there's great potential here as well to find more ounces and increase the life of mine. And we'll be doing some more drilling there in 2024 to try and expand some of these zones and find more ounces. So we think there's real potential, and that was one of the reasons we bought the deposit in 2021. Just a quick word on San Jose, the Argentinian asset, located in the south of the country in the Santa Cruz province. It's been going since 2007. Here are the forecasts, bit of a dip next year, but we should be able to expand the plant in the year after that and get production up a little bit. Just a note here that the 51% owned mine is 49% owned by McEwen Mining, which is listed in Toronto and New York. You can also see where the costs are at the moment, relatively high, but should be coming down over the next couple of years. Capital allocation, very important to us. We have really 5 priorities: investment in our current projects, so finish up the construction of Mara Rosa, get the permitting all done and the engineering work all done on Roy Rapata. Then brownfield exploration, I talked about how important that is for us. So there'll also next year be another 30 or 40 million dollars spent on brownfield. We will look to pay down some debt. Debt at the moment is about $360 million. We have about 114 million cash. So we're net debt is not onerous for us. It's about 250 million roughly. But that's something we would like to look at paying down at some point. Capital return, we have paid a dividend up until last year when we were delayed a little bit. When we were delayed a little bit on the permit, we decided to stop the dividend, but we would look to start that again quite soon, hopefully. M&A wise, we will always assess M&A, but obviously in terms of the other things, it probably goes to the back of the queue. I talked about net debt, about 260 million, and dividends as well, a very important part potentially going forward. ESG is really important to the company as well. It's fundamental to our purpose. I don't want to spend too long on this, but health and safety has been a really, really crucial part of our ESG strategy over the last few years. And I think it's beginning to really show some fantastic achievements in terms of very, very low lost time injury frequency rates, very low accident severity index. And I talked about the fact we have 4 million hours free of accidents in Mara Rosa, 2 million in Palancata. It is absolutely crucial, especially in underground mining, of course, to focus on safety, but across all mining as well. Environment as well is a very important part of what Hochschild does. And just to let you know, the modified environmental impact assessment we did for Immaculata had about 45 to 50,000 pages. So it's something we take extremely seriously. And you can see some of our policies there and the achievements we have had. Community engagement is also really important, and we're always looking to try and employ as much as we possibly can of local workforce, but also procure a lot of our supplies from local businesses. And that's something we've very much focused on. So that brings me to the end of the presentation. Why do you need to invest in Hochschild? Well, look, I think it's absolutely crucial that with Hochschild, we're focusing very much on our core business, those 4 assets I mentioned. We're looking to increase production, and that will start literally from the next half, in half 1 2024. And we are also looking to lower costs over the next 2-3 years. We have a new management team in place, maybe something I haven't mentioned, but we've got a new CEO who came on board on August the 26th this year, Eduardo Landin. He's been in the company for many years. He was COO for 10 years. So we have a very experienced management team in place, and that's very exciting for them. Our flagship Immaculata operation, of course, has been completely de-risked after the approval of the mayor. And we obviously have the new mine very much coming into production in Brazil, which is really exciting next half. So that's the key points I want to make on Hochschild. And now I will go over to Q&A. So let's start with the first one. What are the drivers of the decline in your projected all-in sustaining costs? Well, what we have is Immaculata, as I mentioned. Immaculata at the moment has a lot of capex that's been deferred from this year to next year. So what you see is a reasonably high all-in sustaining cost for 2024, but that starts to come down. You have a much more normalized capex in 2025 and 26, so you see those costs come down. Then, of course, you have Mara Rosa. Mara Rosa is going to be a low-cost mine, as I mentioned, and Mara Rosa will come in next half, as I mentioned, and that's going to be our lowest mine. So that will also drive the decline in costs. So I think it's those two, and then into 2026, you'll then see the low-cost Roy Rapata deposit come in, and that will also help costs. The next question is, what is the remaining life of mine at San Jose, and will you look at expanding in Argentina given the new government? That's a very good question. Remaining life of mine at the moment officially in San Jose is about 3 to 4 years. And look, we have been able to replace resources there every year since it started. So I think we're quite confident that we can continue to do that. In terms of Argentina, Argentina's obviously been up and down when it comes to politics over the last, well, really probably the last century, but certainly over the last 20 years or 15 years since we've been operating there. I think for the time being, we probably wouldn't commit huge amounts of new capital to Argentina. I think it's a tough place to do business. I think we're quite positive about the new government. It does seem very likely that they will loosen a lot of the rules surrounding business, look to invest in mining, maybe cancel exchange controls, and of course, we could see a major devaluation in the currency, which a lot of people are expecting. The next question is, what are your key milestones for 2024 and any headwinds that concern you? Well, the key milestones, I think, are the ones we've mentioned. I think is absolutely crucial that we bring Mara Rosa into production next half, ramp it up properly, and start delivering the cash flow that everyone is looking for. And if we can do that by the time we get to the middle of next year and demonstrate that to you, I think that'll be absolutely crucial. So that's a key milestone. I think we then want to obviously make sure we remind the market on any of the brownfield exploration the progress that we make over the next few months, and as well as that, how we're doing on the permitting with Roy Rapata. I think those are the sort of 3 areas that for me are going to be key over the next 6 to 9 months. Well, at the moment, I don't have any further questions. So I'd just like to say thank you very much indeed for tuning in. And if you have any questions for me, please do contact. Thank you very much indeed.